Welcome to our comprehensive Nzd/USD Analysis Report covering September 29th to October 4th, 2025. In this presentation, we'll examine the New Zealand dollar against the US dollar, providing you with key technical levels, trading signals, and actionable recommendations for both short and medium-term horizons. Our analysis draws from multiple professional sources, including TradingView, investingLive, ActionForex, Forex.com, and DailyForex to give you a complete market perspective. Stay tuned as we break down the critical factors affecting this currency pair and identify potential trading opportunities in the current market environment. Looking at the latest TradingView data as of October 3rd, the Nzd/USD is currently trading at 0.58311, showing a modest daily gain of 0.24%. The pair has been moving within a tight range, with a daily high of 0.58450 and a low of 0.58050. Trading volume remains relatively light at 24.3K. Technical indicators present a neutral outlook overall, with oscillators showing 2 sell signals, 8 neutral, and 1 buy signal. Moving averages are slightly bearish with 11 sell signals against 3 buy signals. Performance metrics reveal consistent weakness across multiple timeframes, with the pair down 0.68% over the past week and showing more significant declines of 4.23% year-to-date. This suggests persistent downward pressure despite recent stabilization. investingLive's technical analysis highlights a currency pair struggling to gain momentum ahead of the upcoming RBNZ meeting. Analyst Sarah Johnson notes that Nzd/USD has been trading in a narrow range, testing the 0.5800 support during Asian hours before briefly climbing in the European session. However, renewed dollar buying during New York trading hours pushed the pair back toward the 0.5830 level. The chart clearly shows key technical levels with resistance at 0.5850 and support at 0.5780. The trading strategy suggests that as long as the 0.5830 to 0.5850 resistance zone holds, momentum favors continued pressure toward September lows. However, a sustained break above this resistance area could surprise bears and trigger a short covering rally. This technical structure provides clear entry and exit points for traders. ActionForex's market analysis from October 2nd highlights a slightly softer dollar amid concerns about the U.S. government shutdown. Treasury Secretary Bessent warned that a shutdown could reduce GDP by 0.2 percentage points per week, potentially influencing Fed policy decisions. Historically, prolonged shutdowns have negatively impacted the U.S. dollar. Meanwhile, New Zealand's economic data shows resilience, with building permits increasing by 5.8% month-over-month in August, up from 5.3% in July. Year-over-year building permits rose by 6.9%, indicating strength in the construction sector that provides some support for the Kiwi. Looking at currency performance, the NZD has declined 0.68% against the USD over the past week, performing slightly better than the Australian dollar and British pound, but worse than the euro and Japanese yen. Key influencing factors include RBNZ monetary policy expectations, U.S. shutdown concerns, slowing U.S. economic indicators, and China's economic performance. DailyForex's analysis indicates that Nzd/USD is currently in a neutral trend with a bearish bias. Technical indicators show the RSI at 44.85 in neutral territory, while MACD also displays neutral momentum. Based on this analysis, we've identified 2 clear trading signals. For the buy signal, look to enter around the 0.5780 support level, targeting 0.5850 with a stop loss at 0.5750. This provides a favorable risk-reward ratio of 1 to 1.7. The sell signal presents an opportunity to enter at the 0.5850 resistance level, targeting 0.5780 with a stop loss at 0.5880. offering an even better risk-reward ratio of 1 to 2.3. The chart clearly marks these entry and exit points, with the buy signal triggered on September 35th when price touched support, and a potential sell signal forming as price approaches the 0.5850 resistance level. Let's examine the critical technical levels for Nzd/USD that will guide our trading decisions. For resistance levels, we have 5 key points to watch. R1 at 0.5850, serving as immediate short-term resistance. R2 at 0.5880, R3 at the psychological 0.5900 level, R4 at 0.5930, which was a previous swing high, and R5 at 0.5950, representing medium-term resistance. On the support side, we have S1 at the psychological 0.5800 level, S2 at 0.5780, which was the September 30th low, S3 at 0.5750, serving as medium-term support, S4 at 0.5730, and S5 at the major psychological support of 0.5700. The current price of 0.5831 sits between the first support and resistance levels, indicating a potential decision point. These levels provide clear zones for placing entries, targets, and stop losses in your trading plan. For the short-term trading horizon of 1 to 2 weeks, we've developed 2 strategic approaches. Our long strategy recommends buying Nzd/USD at the 0.5780 to 0.5800 support zone, targeting 0.5850 with a stop loss at 0.5750. Look for price bouncing from support with increased volume as your trigger. This setup offers a risk-reward ratio of approximately 1 to 1.7. The short strategy suggests selling at the 0.5850 resistance level, targeting 0.5780 with a stop loss at 0.5880. Your entry trigger should be a price rejection at resistance with a bearish candle pattern. This provides an even better risk-reward ratio of about 1 to 2.3. Keep a close watch on several key events that could impact these trades. The upcoming RBNZ monetary policy meeting, U.S. government shutdown developments, U.S. economic data releases, and New Zealand economic indicators. These events could create volatility and potentially trigger your entry points. Looking at the 1 to 3 month horizon, we've identified 2 potential scenarios for Nzd/USD. The bullish scenario, which we assign a 40% probability, could see the pair reach 0.5900 to 0.6000. This would likely occur if U.S. economic data continues to weaken, the RBNZ maintains a cautious but not dovish stance, the U.S. government shutdown extends, and New Zealand's economy shows continued resilience. The strategy here is to buy on dips, focusing on the 0.5780 to 0.5800 support zone. The bearish scenario carries a higher 60% probability, with a target range of 0.5650 to 0.5750. This could materialize if global risk aversion intensifies, the RBNZ signals potential rate cuts, or China's economic slowdown impacts New Zealand exports. For this scenario, the strategy is to sell on rallies, focusing on the 0.5850 resistance level. Key upside risks include a deeper U.S. economic slowdown and RBNZ maintaining a hawkish tone, while downside risks include global risk aversion and deterioration in China's economy. Successful trading requires more than just good analysis. It demands disciplined execution. Our risk management guidelines recommend risking no more than 1 to 2% of your capital per trade, with daily and weekly risk limits of 5% and 10% respectively. Always adjust your position size based on stop-loss distance and consider scaling into positions at key levels. Follow these 6 essential trading discipline rules. First, stick to your plan without emotional interference. Second, always use predetermined stop losses to protect your capital. Third, respect technical levels for entries and exits. Don't chase the market. Fourth, Only take trades with a minimum 1 to 1.5 risk-reward ratio, preferably 1 to 2 or better. Fifth, manage your emotions by avoiding trading during high emotional states. Finally, keep a detailed trading journal documenting all trades, including reasons for entry/exit and lessons learned. These disciplines will help preserve your capital during drawdowns and maximize profits during favorable market conditions.